I'm going to talk about the games sector and why we're excited about it, and also you may learn a few things that you didn't know. So first, really what I want to do is talk about myself. I figure I have everybody stuck in this room, why not? That's me in 1982. This is when I got my PhD in gaming. I know that's pretty impressive. I also look the same, right? That's what people tell me. But this is my video game experience going back 40 years as well. So this is the Atari 2600. I always say it's not an air purifier for those that don't know what that is. But this was actually my big first purchase. It was the leading mass-selling home video console ever. And I spent $149 on that back then, which is about $1 million in today's money. But it was a lot of money, and it was a big purchase for a kid. And this was my favorite game. It's a game called Pitfall by Activision. Activision was a games company that was founded in 1979 in Southern California, and Pitfall was released in 1982 and was by far their biggest hit. I used to play this game for hours in my basement until my hands blistered. And in fact, I got really, really good at it and was scoring higher and higher scores. And what you did in order to impress your social network, which at the time was basically my friends at school, was you would take a picture, in this case a Polaroid, of the TV screen. Again, I'll have to explain a lot of this afterwards, I know to some people. And then you would actually mail that through the regular mail to Activision headquarters, and 2 months later, if you were lucky, the reward that you would get back was a nice patch, which I proudly wore on my jeans jacket at school. So let me hit pause on my personal experience, and I'd like to talk a little bit about the story of Activision Pitfall. So Pitfall was Activision's best-selling game from late 1982 to early 1983, and it sold a few tens of millions of dollars and allowed Activision to go public in 1983 as well. It was a very high-selling game. However, very quickly, the entire home video game industry hit a literal pitfall. What ended up happening, as you can think about it, is you had to buy a very expensive console. You had to do a one-time retail cartridge purchase. You often didn't know whether the game was going to be as good as Pitfall or something not good. And the industry revenues from 1983, being a little bit over $3 billion, fell down to $100 million in just a matter of a couple of years. That's over 95%. And Activision actually started to move away from the games industry into the business software industry and began to compete with a fledgling company called Microsoft. Fast forward a little bit to the 90s, and this guy, Bobby Kotick, in 1991, he bought Activision for $500,000. He moved them back into the games industry and started making a series of acquisitions, culminating in 2008 with the acquisition of Blizzard, which was a property of Vivendi Games. And if we fast forward 40 years later, from my interaction with Pitfall to January of this year, Microsoft announced that it would be acquiring Activision for $70 billion. This acquisition is the largest by 3 times that Microsoft has ever made, and in fact, it's the largest tech acquisition ever if it goes through. Microsoft's CEO here, Satya, said, if you read the quote, many of the things that make us excited about investing in the games industry. In addition, this guy, this newbie gamer, Warren Buffett, actually picked up $1 billion of Activision stock last year before the acquisition because he thought that the stock was undervalued, a games company that Warren Buffett was buying. Pretty strange, but a pretty good investor too. Now, I ran through about 30 or 40 years of the games industry from Pitfall to the Microsoft acquisition, but let me give you some facts. So with the proliferation of smartphones, with the change in the model to free games, with games that are now being updated on a daily basis or even an hourly basis, with the ability to play online with a multitude of people, there are now more than 3 billion gamers worldwide. That's basically half the planet. And in fact, there are games with hundreds of millions of users and games franchises that generate over $1 billion in revenue on an annual basis. Again, very different from my experience with games when I was younger. It's also interesting to note the entire revenues generated by the industry this year will be over $200 billion. To put this in perspective, this is the same amount as will be generated by cybersecurity, what we consider a very, very hot market, and it's the largest sector within media and entertainment. Looking ahead, the forecasts are that this can reach a $500 billion market by 2030. And we, in fact, believe that games are going after the trillion-dollar entertainment market and can reach that level over the next 10 or 15 years. Now, we definitely believe that people are going to still go to movies or maybe at least watch movies at home. What's interesting to note is that Netflix, for example, said in their shareholder report that we compete and lose to Fortnite, one of the leading first-person online games out there that I assume most of you know, more than to HBO. And in fact, I'm sure that all of you know that have Netflix, they've started streaming games on their platform. What you might not know is that a month ago, they actually opened up their first game development studio. And we believe that companies like Netflix, not just games companies, not just big tech, but media and content companies are going to move more and more into the games sector. Now, what's really interesting is that VCs have largely avoided investing in games. In fact, one of the VCs in this room looked at me and said this morning, games, right? So, the data does show that it's a bit of a second-class citizen. Roughly 2.5% to 3% of all investments in venture capital go into games. It's a very, very low number. But we think it's really due to a lot of misperceptions and conventional wisdom that is wrong about games, including that it's a niche market, these are fad businesses, there's no technology, poor business models, and that they're limited exits. In terms of a niche market, I just showed you, it's an over $200 billion market today, again, the size of the cybersecurity software market, and is targeting a $1 trillion market. So we think it's a massive opportunity. In terms of it being a fad business, if we look kind of at the evolution during the time of when phones have gone from what we saw in 1993 till today, these franchises have been around. And many of you know these and have played these when you were younger, and now play these in adults. Franchises and games can last for decades. In terms of no technology, both Roblox and Unity, which are game development platforms that went public last year, will each spend nearly $1 billion on R&D in 2022, really trying to solve some of technology's most complex problems. I don't know how many of you know Twitch, but this is a platform for watching games that Amazon bought. They are streaming every day 2.5 million hours of live broadcast gaming. You can't imagine how complex of a tech challenge that is. In terms of unattractive business models, with virtual goods and subscriptions, games are now becoming much, much more predictable, and many of the metrics that are used to measure games are actually becoming the de facto metrics to measure consumer investments and, dare I say, even enterprise companies. And we think that'll continue going forward. In terms of limited exits, well, it was pretty impressive, this Microsoft acquisition. But I think perhaps even more interesting is that since the start of 2021, there's been nearly 500 M&As with 60 above 100 million. So very, very active exit market. There were the IPOs I mentioned of Roblox and Unity last year. Roblox, even after the downturn, is trading at $27 billion, and Unity at close to 10. And there's been already this year over $100 billion in M&A with a whole variety of buyers. So again, it's not just games companies buying games companies. Another interesting thing is what we like to think of as a valuation arbitrage. This is the comp table of enterprise software as a service companies from our friends at Goldman Sachs. As you see here, these companies, public companies, need to be valued on revenue multiples. And the reason why is because the majority of them are just not profitable. You see all the NMs there. If we look at the games comp table we got from them, they are all profitable. You can actually value these companies on profit. Wow, it's a new thing and pretty amazing and pretty important going into the environment that we're going into now. So if we believe that games also are having more and more predictable models, there's definitely a valuation arbitrage between the games companies and the SaaS companies that we think will close. Now, beyond that, we actually think there's a myriad of reasons why the market is poised for even larger growth. Be it AR, VR, and the metaverse, it's really in that area that games are the only thing that's happening today. Be it AI in gaming and 3D content to make games much more lifelike. The gamification of everything. We're seeing games enter the workforce. We're seeing games enter education. And dare I say, blockchain, Web3, NFT, crypto. This is the way that you can own your virtual goods and actually move them between different platforms. But I think that'll take time. Regardless, I think the market is, again, poised for huge growth. There was a big boost from COVID, but most recently we saw when Roblox reported their results, they actually reported an increase this year over last of 23% to 60 million daily active users, and the stock went up 25% over 2 days. Clearly, the market was impressed that there was still significant games growth. Earlier this year was when Andreessen Horowitz, one of the leading names for entrepreneurs in venture capital world, announced a dedicated games fund. As you can see, they touched on many of the reasons that we're excited about it, and also that games require a specialized focus. And we really believe this as well. We invested in this fund. This is our first dedicated fund investment, and we believe we'll do more dedicated games funds going forward. Now, I would be remiss not to address the gorilla in the room or the Donkey Kong in the room. It's not all fun and games. Games do have negative effects, and we're very aware of that. But also, many of you might not know that games actually have a lot of positive effects. And there was a big study that was released last week about the positive cognitive effects of game playing. With that being said, as a firm that's focused on health and ESG, we are acutely aware of this. And in fact, we've passed on games investments because we weren't happy about the impact of the particular game. And finally, perhaps where we're most excited about it is because of our history thus far in investing in games. We've actually done pretty well, both directly and indirectly through deals and through our funds. So I'll just touch on a few, but Moon Active is a leading mobile games company. We did a large secondary deal there in late 2018. The second one was Crazy Labs. This company is in the hyper-casual segment. They were bought by public company Embracer last year as part of a large shopping spree. Indirectly, we had a lot of exposure to Roblox and also a company called Discord, which is the #1 communications platform for players when they play games. It was last valued at $15 billion. And the last example, but not least, is Epic Games. At $32 billion, this is one of the most highest valued private VC-backed companies in the world. Clearly, this is going to be an area where we're going to be investing more going forward. So thank you.